Welcome back to Where You Live. We're broadcasting live from the Concierge Landscape Studios. And if you're just joining us today, we've got a number of topics that we can talk about. We're going to be talking about whether homeowners in associations are unfairly taxed. There is a couple of situations that are in the news that I think are worth taking a look at that. We're also wanting to take a look at a question we get a lot from board members, and that is, how do you know when your bylaws need updating? Mm-hmm. How do you know when your governing documents need to be reworked and updated and amended? We're going to give you a checklist of some things to take a look at to see whether or not that's the case. We also want to take your calls as well. The number, Tony?
651-289-4488.
Yes, and folks can also get a hold of us by email, too, if they wish. And that's Gene, Gene, at ncmgi.com. If you're shy and don't want to get on the phone, you can email us your question or comments, and we'll read them over the air. Before we get back, though, I'd like to just let our listeners know in the first hour we have a free news subscription. It's a newsletter, comes out bi-monthly, called What's New. A lot of the topics we cover on this show are covered in further detail in that letter. It's a great resource to have. It's yours free. All you need to do is give us a call during the week at 952-2500. Ask for Courtney. She'll make sure that you start receiving your subscription. Well, before we take a look at our homeowners in associations unfairly taxed, Tony, we do have an email from a homeowner.
All right.
So why don't we go ahead and read that over the air here and deal with that here first. And this is from Justin in St. Paul. And here's his question. He says, hi, guys. He said, I have a question regarding the deductible on master policies.
This is insurance policy deductibles.
For a homeowners association.
The homeowners association's master policy. Okay.
Yes. He said, where does the authority come from to pass on a deductible to a individual homeowner's HO6 policy? For those listeners, what happens if you're not familiar with the homeowner association, there is an insurance policy that the association has all homeowners pay for. It's called the master policy. It takes care of, in case of an emergency or a fire, hail damage, catastrophic event.
Common areas, covers common areas.
And the rebuilding of the inside of their home, too, to some extent.
Depending,
you'll have, but in a claim, there's going to be a certain amount that's going to be covered by that master policy. But because a master policy holder does not, or the insurance company does not know everything that's inside a person's individual homes, they leave that up to the individual to get what's called an HO6 policy.
Sure, and the HO6 does not only cover personal belongings of the owner, it may cover interior fixtures. We see policy or documents all the time that say the HO6 has to cover the sheetrock in.
Yes.
So cabinetry.
And others will say flooring and everything will be covered, but only original, not
the original fixtures.
Not the betterments or improvements.
That's right. So in any event, the homeowner needs an HO6 policy. The association has a blanket property and liability policy.
And in those cases, to keep costs down, there's usually a deductible. And we're seeing a lot of times, probably today in the industry, a deductible of about $5,000
yeah,
is quite
although
common.
We've seen higher, too.
Yeah.
Yeah.
And so that means that the first $5,000 has to be picked up somewhere, and that's usually when the individual's HO6 comes in. And so that's behind all of this.
His first question was, where is the authority? Does the authority come from
to pass
for the association to pass that blanket policy deductible on to the individual owner?
You want to field that?
Well, it usually
answer?
comes from the governing documents, doesn't
Exactly,
it?
yeah.
So you need to know your governing documents.
Yes, and that is true. That is where the authority comes from. It's the document itself. And next, he asks, we currently have a $5,000 deductible. That's common. Mm-hmm. But he said, but to save money, there is now talk of raising that to $45,000
Oh man, for the property and for the association's property and liability.
for the deductible. Yes. Ooh, that is high.
Yeah.
And he says at that rate, it almost seems like we don't have any coverage at all, in my opinion.
Yeah.
I could see where you could feel
Because
that
truthfully, most claims are well below that. Often claims are below 5,000.
Yeah.
Yeah.
So he goes on to say, in an association, he said, our association, it was built before 1982, so it's pre-Kiowa, wasn't, so the state statutes he's opted out of that
They
because
haven't.
he's a townhome.
Yeah.
And he said the governing documents are vague, don't specify dollar amounts that the deductible needs to be in. So he said the association, are they able to pass on this deductible to owners that caused the claim?
Well, for one thing, there's a reason the documents don't state a deductible amount, and that's because that's a function of the market, and that changes all the time. The documents can't control the deductible amount. The insurance market controls that.
Yeah, in fact,
so there's that.
Yeah, in fact, that's one of the reasons we're going to be going over when do you know your amendments need to be. Your documents need to be amended.
Yeah, that's right.
That's one of the reasons if sometimes things are too specific because the writer of the governing documents back then wasn't able to recognize that there could be room for things to grow or change.
That's right. There you go. The other piece is $45,000 is a very, very high deductible amount, and I agree with Justin. It's almost like not having any insurance, any master insurance at all, if that's going to be the deductible amount. And I don't think you can count on the fact that all HO6 policies are going to cover that amount of a deductible.
No, I mean that would be my first concern.
Yeah.
Is that I'm sure that there. I mean, I know that the answer is yes. You can always get insurance for anything. That's why the Lloyd's of London exists.
There you go.
You know, you could insure your left pinky.
Sure.
Sure. You know, if that's all you wanted to do.
But what's the catch?
But the catch is that it comes at a great price.
There you go.
And so I can see it. I can see that there is probably a well-intentioned, well-meaning board that's
Sure.
trying to take a look at some real ways of saving money,
Cutting down the cost of those premiums for
Exactly.
that property and liability
And
policy.
I don't know this to be the case, but I bet you they're self-managed.
Oh, that could be. That could be.
Because otherwise, I would have, Otherwise, I would have thought that you might have heard some other discussion or recommendation from a property management company too.
Right.
Because one of the things that we would be talking to people about, and that is it possible to even get $45,000?
Okay, number one, what's the savings on that premium, and what's the additional cost on the HO6?
Yes.
How do those compare?
Because if you tell the homeowners, we're going to save everybody $100, $150 each
On the master
policy. But then you go to your HO6 and they say, yes, we found someone who will give you a $45,000, but you have to pay $250 more.
That's not a savings to that owner.
No, it's not.
That's right.
Or to all of those owners
That's
because
right.
they're all going to be
Or
paying
either
that.
any owner. That's right.
So that's something that needs to be looked at. And,
Yes.
and I think hopefully it was just the beginning discussions here, Justin.
Yeah, I hope so.
And not the end result here where the board's saying this is what's going to happen. I think you'll probably find that as this discussion goes on that they'll find that it's untenable, at least right now.
I just want to emphasize that the board should be having this discussion with the entire membership. This is a huge change to their insurance process.
It's
and their
a lifestyle
insurance
issue, to be sure.
And it's not a decision that I would not recommend that a board make this decision by itself. They need to get the input of their homeowners so that they are truly representing what their homeowners want.
Oh, yeah.
Yeah.
They do. And hopefully they'll be able to find something. But it sounds like maybe there might have been some other claims in the past that have caused insurance
trouble.
claims
Yeah.
to go up. So
We want to hear from our listeners. We want to hear your opinion on any issues we discuss, or we want to hear what your burning issue is, call us 651-289-4488.
Yeah, we were talking so far about insurance. Tell us what you think about that. We talked earlier, the first segment, about flying the flag. So you can call us about that or whatever else is on your mind. But I tell you what, we need to take another break. And when we come back, we'll be ready to field your calls and so much more here on Where You Live on AM 1280 The Patriot.